are live today, live.
Is someone talking?
Yes, yes, we are.
It's very mild. No, I increased it. It's not coming on speaker.
What's cutting off? Okay, I was getting an echo. How about now?
Yeah, we can hear it now.
Okay.
We're in a loose service because we're going in the garage.
Oh.
So what are we doing tomorrow? It's going to be an open session, question and answer. I got some things I got to show you on the futures market, which is very bullish. So when a few more people come in, we'll start.
Attention all parents, let's all keep our guard up and our masks on, just to keep us extra safe. And if your kids are 12 or older, have them get the vaccine if they can. Please do your part.
All right, Hannah, you're here. Where's Sonia? Okay, does anybody want me to go over something real quick before I do a quick analysis for the day? All right. I was looking at the futures market right now. It's looking pretty bullish. This is the world market right now. Right now, as we're talking, Europe is opening up and everything is looking real bullish. We're actually green and everything looks like it wants to open bullish. So we might have a rally tomorrow. You look at the future index, the euro, the stock 50 is up 44, the FTSE 48, the CAC 53, and the DAX 150. Asian Pacific is also very strong. So we should be looking at a strong market tomorrow. So look for a real strong market tomorrow, according to the futures market right now. If everything holds over the night and at 2 p.m. and 2 a.m., we should see a strong market. Again, those that are just joining us, I just showed two charts, which is the world's map on the futures and the future index, Asian Pacific and Europe. Anybody wants me to go over anything? Okay, so let me bring up the chart. I was looking at something in the weekly on the SPX, and I was noticing that on the weekly chart, notice that 4100 is going to be a strong resistance level. So we need to be very careful, make sure that we don't stay range bound around here. So keep a good eye on any pullback. A break of 4400, we're going to start testing the whole numbers. If we don't break the whole numbers, then we'll bounce and continue to go higher. Just keep aware of that. Again, on the daily, we're not seeing anything but an uptrend. The Dow is also bouncing, also with an uptrend. Another thing, we spoke about Dow theory a couple weeks ago. According to Dow theory, the transportation is always usually the leading indicator in order to have a correction or a market crash. Right now, we're not going to have a market crash, but a correction is more likely. Again, that to me, that scenario is off the table. We're going to see pullbacks and not corrections, at least not for now. Maybe in October, at the end of October, we might even see a correction in November, right before a Santa Claus rally. It happened a couple of years back. But right now, the Dow Jones transportation is no longer following Dow theories, which Dow theory indicates that the transportations are going down and the industrials are going up. Most likely, the divergence that is occurring, the industrial will eventually come down, and the transportation will lead the correction further down. This is not happening right now. We met support, Chaikin met support, and Chaikin also is looking to go up. The Nasdaq, very strong support on the Nasdaq here. Very strong support. Oh, you're not seeing my screen. Oh, wait 1 second. Damn it. All right. You can see it now? All right. Let me start all over again. This is the world's market as it stands right now. The futures market right now is looking all positive. Europe is green, Asian Pacific is green, so we're looking to most likely open green. Also, in see the Euro stock up 44, the FTSE 48, the CAC 53, and the DAX 150. Asian Pacific, the Nikkei, and everything is also looking super strong. So we're probably gonna have a strong opening tomorrow. Most likely, we're gonna have a strong opening tomorrow. Well, I was telling you about the weekly. Okay, on the weekly chart, we're gonna keep an eye on Fibonacci levels. The only reason is because if this thing decides to retrace, we're looking at a Fibonacci level of about 4,100 pullback. So start looking for pullbacks within the whole numbers 44, 43, 42, 41. We have strong. This is a weekly chart, so even though in the weekly chart this thing still looks strong, it looks very bullish. I still don't see this thing coming down. This thing looks very bullish. But anyway, it's always good to just keep an eye on the whole numbers to see if we get any type of pullback. I was showing you the Dow. Same thing with the Dow. The Dow basically has been going sideways, but the Chaikin is bouncing. Dow has plenty of room to go up. So don't be surprised if we go up. If the MACD intensifies and goes higher, and the histogram starts making waves like this, then this Dow is going to go and test this pivot point, which is about 35,764. The Nasdaq. Same thing with the Nasdaq. If you look at the Nasdaq, the Chaikin has had strong support right here. The Nasdaq has a pivot point right here at 15557.16. Volume is good, and the Nasdaq is very strong. Look at the separation on the moving averages. So the Nasdaq continues to be a leader and continues to lead the market up. This is very important to look at because this pivot point most likely be tested. Look at the Bollinger Bands also. You see how the Bollinger Bands are opening up? That's a big sign. That's a big bullish sign that this thing is gonna go because when the Bollinger Band open, that means higher volume and price action is coming in. TLT, if you notice, TLT is making a huge cup and handle. Huge cup and handle. You could actually see it right here. Watch. break above 153 will make TLT go even higher and higher. That means the SPX will also go higher and higher. So TLT is doing a huge cup and handle, very bullish. TLT goes up, interest rate comes down. Nasdaq will love that. Tech companies love that. The only thing we have to look at is, again, the VIX. VIX is very important. This gap seems like it's going to get filled. So look for the VIX to bottom out around 1550. VIX bottoming out under 1550. That will make a very bullish run for the SPX. Okay. Anybody have any questions? Any questions? Anybody want to share something? Anybody wants me to go over a chart? Are you guys able to talk, or do I have you guys muted or something?
I did not get talk on this live, man.
Yeah, you could talk. Go ahead. Anything you want me to look at? You talked about economic data. Data.
Yeah, I'm looking at economic data. There's nothing much that's coming out this week that I can think of. I mean, let's see. I forgot what I saw. Job openings. I don't put any. I mean, I don't see anything this week that's going to give a stall out going higher.
Well, what's gonna happen is, hold on. Tell you right now. Here's a calendar. This is the calendar for Monday. For Tuesday. Nothing. Being that there's nothing on the calendar, they're gonna FOMO this up. Wednesday job opening and the beige book. Beige book really doesn't move the market. It has lately, but there's nothing's changed. Absolutely nothing. So the only thing
I don't think the beige book is going to change anything either, because everything that the Fed's going to want to release has been released, and they'll be sending out their stump speeches, for all these Fed presidents coming up. So yeah, I think everything that the Fed's going to try to convey over is already baked into the number. So I don't think, and then looking at the weekly economic, there's nothing to me that says, hey, the climb up higher is going to get tripped up. So
right. Tuesday and Wednesday is going to be a super easy day. I could almost guarantee you 98% that we're going to have a put credit spread. Okay. And this thing is just going to trickle up. If the European market at 2 a.m. holds the green and their price action, we're going to continue it. So Tuesday and Wednesday should be very, very easy trades. The most part that Wednesday is, the worst that you have on Wednesday is the 3 p.m. consumer credit, and that really doesn't really move the market. But that's the only thing that could move the market at 3 p.m. is that, and that's because there's no other news. So the market might get a little tipsy to hear anything on Wednesday, and that's the only thing that they're gonna hear. But other than that, I don't see nothing at all. And at 10 a.m., the job openings, come in line, market's gonna go higher.
Are you still in the? Well, you know what? I don't think it was you. It may have been one of the other traders that said you have to be very directional on these market conditions. Are you in that camp, or are you thinking that someone you could still pick out, say, iron condors, even though maybe you may have to leg into it as opposed to clapping the iron condor on right off the bat?
If I were to do an iron condor, I would do it on Tuesday. That's the only opportunity you'll get for an iron condor, because that's the only day. One or two things going to happen on Tuesday. The market's going to get muted or trickle up and hold, and there's not going to be no volatility because everybody's coming back from the holidays and everything, so they're just digesting the news. But on Wednesday, I wouldn't. The problem with iron condors are right now is that you have a very bull market that's not willing to die. So even if you leg into an iron condor, okay, the market has shown resilience to the point that in the last hour or two, it has popped 15, 20 points. And now here you are with an iron condor with a 20-point cushion, and now the trade is being threat. You have a threat to the trade just because of an event or a FOMO buying or an algo being tricked because this market is so bullish. Hannah, what are you seeing for your HORB strategy for this week? Let's go, Hannah.
Hey, can you guys hear me?
Yeah, we can. What's your HORB strategy for this week? What's the prediction?
So HORB, you have to wait and see what the first candle does. So if you're thinking it's going to be bullish market, it'll probably be a put spread as well.
Well, the best day for your HORB right now will be on Tuesday. The skies are clear. There's no storm. There's nothing unless they drop a bomb on us, without us expecting it. That will be probably the best day for your HORB strategy on Tuesday.
Okay, so tomorrow.
Okay. Sonia, you have anything on your plate? I know you got some advanced strategies. I don't know who taught you that you've been doing lately. You ain't not been sharing.
Let's see what tomorrow brings. You can hear me?
Yeah, we can hear you. That sounds like Ping telling you what to say.
Ping is not with me. I left. I'm home already.
Okay.
Yeah, so it's I think we'll have to wait up till tomorrow and see if we get an opening bar trade.
I don't think we will. I don't think we'll get a bull trap either. But if you're not bullish on this market, you're a little bit dangerous. All we have to do is wait. Look, these are the two key factors that you have to look at tonight. 2 a.m., see if the continuation of the futures market go up, and 8:30 a.m., see if there's no sell-off within the future market opening into the U.S. market. If there's going to be a sell-off or there's going to be a weakness, it usually happens between 8:30 and 9 a.m., an hour to 30 minutes before our market opens. Many times the futures market will be up 15, 20 points, and all of a sudden at 8:30, it'll drop and it'll be only up 5 because they're expecting something in our market. So those are the two key windows that you need to look at. 2 a.m., which is when Europe opens, and then 8:30 to 9 a.m., which is when we start about to open, and they'll decide whether to hold or drop. That's like their power hour compared to our 3 to 4 p.m.
Just with the benefits ending, it's not going to make any difference?
The what?
With the benefits ending? I'm on my phone, that's why.
No, that shouldn't affect nothing. The market that's already priced in. Listen, What will, this is what you gotta think about, okay? They end the benefits right now, okay? So what happens?
They don't get paid.
No, they
They
gotta
don't
go get
pay.
a job. No, they gotta go get a job,
Yeah.
right? Which there's plenty out there,
Oh, plenty out there.
okay? Now, if the benefits would be ending and there will be no job, then yeah, the market will spook out, okay? But by ending the benefits, all you're doing is there's plenty of jobs out there. There's a for hire in every single door in every single business from Florida to California.
Oh, yes. Oh,
Okay.
yes.
So if they cut the benefits, guess what? The guy will go work. The guy will get a job.
Mm.
The market knows that.
Mm.
The market
Right.
knows that there's jobs out there. Now there will be no job and the economy will be, weak, and unemployment, is up because there's no job. Unemployment is up because they're getting free money, not because there's no jobs. Because nobody wants to work. The main thing the market is going to look at is the Feds, the policies, and the tapering. The cutting of the benefits and all that, that's secondary. That's already baked in. They don't care about that no more. The market's main thing right now is, what is Jerome Powell's next move? Jerome Powell is against the wall. What is his next move? If inflation starts creeping up, he has to raise interest rate. That will spook the market. The moment of the first day that Jerome Powell starts hinting into raising interest rate, then there's a problem. And again, look at TLT. Look at TLT. TLT is forming a cup and handle. Cup and handle. If TLT goes up, interest rate goes down. Look at TLT on the weekly. It bounced off of support. Look at how strong Chaikin is. Look at this. MACD is wants to roll over. TLT wants to go up. So if TLT goes and tests 171 or 177 area, interest rate will stay lower. All they have to do is deal with the inflation part. That's it. Jacko, I just saw you joined us. How you doing today, Jackie?
I'm good. Yes.
We were just showing on the futures what's going on in the futures market that is looking strong. Again, we have Asia and Europe green. This is from the Bloomberg terminal. And we have the stocks FTSE CAC and DAX also green, and Asian Pacific Nikkei, Hang Seng, CSISP, and Kospi. Everything is looking green. If we're able to hold that until 2 a.m. and 8 and 8:30 a.m. and we continue to climb or hold, our market would open strongly, and most likely a put credit spread will be in the table. Just so you know, and so you can start looking, okay? Tomorrow, when you're gonna go pick your spread, look where the support is at. 45.20. Okay? 45.20. Don't panic. All these moving averages line, all these lines that you see here, okay, those are all support. You have a pivot at 45.31. Remember Friday's session, okay? Why did we put the trade, that 260 trade that they're so mad about? Why did we put it? Because 45.30, okay, that's why I tell you guys, pay attention to price action to see where buyers are hiding. 45.30 was a strong support. It never went below that. When we placed our trade, it went to 45.31 and some change, but it never hit 45.30. So tomorrow, concentrate on a put credit spread. If we open green, in the area of 45.30 and below. Stay below 45.30, 45.25, 45.20, 45.15, depending on how the premiums are. Premiums are probably going to be a little bit low because the VIX is really not that high. So any other questions? Anything else you guys want to know?
Jess, I'm just wondering what's coming to focus. Like I could just imagine a soccer match between the Fed and the White House. So whose court is that ball on right now, do you see?
Right now, Jerome Powell is the quarterback, and he has full control. Jerome Powell is probably one of the best chairmen that we've had. Not like Alan Greenspan or Janet Yellen. Okay, Janet Yellen is very dovish. She really is not the best Fed that you could have. The only reason that she succeeded in what she did because she did nothing. So, but Jerome Powell is more of an economist. If we could hold the inflation to more or less to where they're saying that it should be 2 to 2.5, okay, and the main thing is to get these people back to work so we can start manufacturing again. This is a supply and demand issue. Okay, there's too much demand and not enough supply. That's why inflation is going up. If we could get the supply up to meet the demand, then inflation will be curtailed. Other than that, it's all on the employment and on the people going back out to work. If the administration wants to play politics and they want to again go with the COVID and this and the shutdown, then that's another issue because again, it's a supply and demand issue. There's going to be more demand and less supply. So the administration is going to be, curtailing on how the manufacturing sector of the economy, which is the supply side, builds up to meet the demand. We're not going to do it. So at the end of the day, it has to be the people going back to work. They got to let these people go back to work so we can start putting back the supply side of our chain and our inventory back up in order to meet down the demand. Eventually, what you're going to see happen is that they're just going to forget about what's going on, and then they'll flip to the Afghanistan issue. If the Afghanistan issue starts to intensify, and we start getting, any type of threats or any terrorist possible attack here or any little, then that's the only catalyst that will make this market drop like a rock in a big time correction. But everything else, economy-wise, is mostly baked in. The only catalyst that we can get right now is a surprise on the Afghan side. That's the only thing. That if those Talibans or whatever is being created out there with the vacuum that's being left out there spills over to our side, then yes, we could have a little surprise where this market could easily go down 1,000 points on the Dow and 500 points on the S&P.
I like how there's so many pivot points you can go to boost the market or have it creep down a little bit. You know what I'm saying? I mean, I don't. It's too coincidental.
Right. And here's the thing, and this is what you need to look at. Okay. That's why credit spreads are probably one of the safest things you could do. Because credit spreads, you have the choice of either putting a spread with, and the spread is the right entry, and you picked up on the right move. You could be in and out, like we did on Friday, between 15 minutes to an hour, or you could hold longer for a larger credit. But you have choices. Okay. Most likely, God forbid, we get some kind of attack. It's gonna be either early morning or middle in the afternoon. So the market is going to tell you, believe me. Listen, when 9/11 happened, the market was on a double top. It was clearly already forecasting something was going to happen. It was on a double top. Okay. Treasury bills were already putting red flags out. Okay, it's almost like the market has a time machine and knows when these events are gonna happen. Anybody else? Any other question? Any charts you guys want to see?
I'm trying to keep it as pertinent as possible. Like, what are you expecting this week or tomorrow? But I tell you, a conversation has to be had about housing that's coming up with the moratorium on evictions being lifted recently, and also maybe something that has to do with employment, because along with employment, people are starting making money. They're going out there to spend money. Then you have the acceleration of money, which can also prompt higher interest rates. Is that not right?
It can to a certain extent. I don't think it will at this time. The only reason is because the factor of a higher interest rate would have to be solely determined by inflation. Remember, raising interest rate is a curtail tool that the Feds use in order to slow down inflation, because people are because there's too much, people are spending too much, and prices are going higher and higher because of the demand is so great. So in order for people, the Fed is basically telling us, hey, you're being irresponsible. And by us being irresponsible by wasting so much money, okay, they go ahead and raise interest rates to slow us down. We're not there yet. So again, the interest rate hike right now is not even on the table. Now the tapering is, because the tapering, these people cannot continue buying billions and billions of dollars every month and building up the balance sheet to trillions of dollars, okay, without no end being in sight. There has to be an end to it. At the end of the day, you got to remember something. The Fed's buying all these treasury bills, they're making a lot of money in the long run. They're stock traders. They're acting like traders. Okay, don't think that because they're adding to the United States debt that they're doing so bad. No, they're not. They're actually benefiting by doing this, because if the moment they start tapering, it means that they're starting taking profit on their goods, and their goods are up, not down.
You say that twice.
Yeah, because a lot of people don't understand that the Feds is a private entity. It's not a governmental entity. Okay, the name Feds is to trick people. Okay, the Feds have nothing to do with the government. The Feds, the federal chairman and the federal open market committee has to do that. They're the one that gives the loans to the United States of America. They're the big bank. Okay, they're actually the one in control, not the United States. Okay, the United States gotta ask them for money. They're the one that authorized the printing of the money. Without their authorization, the United States cannot borrow. Okay, so if you look at the Feds and what they're composed of, who are the Feds? J.P. Morgan, Morgan Stanley, Bank of America, the Rockefeller, the Rothschilds. It's all a collective group of bankers that got together and put all their wealth together and said, hey, we're going to be the Bank of the United States. So they're not going to lose. So the moment they start tapering, all they're going to do is just taking profit. No different than what the market is doing. It's just how fast they do it and how quickly they do it is what the market is concerned about. Andrea, any other charts you want me to look at? I know you got that match. I've been looking at that match.com. Tomorrow I'm going to take a look at it as soon as it opens up.
Do you have any guidance on what you're thinking about how we would trade it?
Well, this thing's probably going to gap tomorrow. Okay. So as it stands right now, this thing is going straight up. Once it breaks the 50-day moving average, it's gone. This is gonna go to 172 and possibly make new highs. Look. So tomorrow pre-market will determine. You could actually probably swing trade this with a Tuesday, Wednesday, Thursday, Friday contract, which are relatively cheap so far, and just buy tomorrow in the morning and hold it until Friday for a follow through and the momentum that follows with it.
So if it gaps up, do you think it will retrace once it sort of hits the top of that congested area right up there?
And this is what you gotta look at. When it gaps up, this is the first time I really use these drawing programs in stock charts. This will be your window to buy right here. That will be your window to buy. Because once it gets up, it gets inside this window, it's above the 50-day moving average. So either the 50-day moving average is going to be a support for it for further buying, and then you look for the breakout on 157. But like I said, this thing might open up tomorrow at 160, 162 easily. Especially they're going to add it to the S&P 500. Everybody's going to want it. It's going to be another Tesla play, more or less, where everybody's going to start acquiring shares in order for it to capture the S&P news or the S&P run up.
So you think a credit spread with expiration on Friday would be a good play?
You could do a put credit spread probably somewhere around down here. You could probably do it under this pivot point 143.40.
What about in the money?
You could do that too. You would do it right above the 50-day moving average with the expectation of a break above the 50-day moving average and a continuation over the R1 pivot. You could do that too.
Yeah.
Remember, you want to stay, if you're gonna do it in the money or at the money, and it hasn't popped yet, you want to try to stay above that 151, the 50-day moving average. So if it does retrace, if this is gonna go, the buyers are gonna buy it at the 50-day moving average. That's for sure.
Mm-hmm. Okay, cool. Thank you.
You're welcome. Faye, I see you, Faye. Stop hiding behind your screen. Come on.
I'm just observing and learning still.
What have you observed and what have you learned?
About how all the indicators kind of play with each other.
Okay.
And what to look at. So I've been observing a lot than trading.
Listen, tomorrow the first thing you have to do before the market opens, okay, and watch the S&P and anything, bring up your VIX index. That's it. This is where Axe goes wrong all the time, okay? And Rick has said some little slick shit, like, well, you know what? I've seen the VIX go up and the S&P go up too. Okay, yeah, you're right, and every other index have gone up also. Okay, you're right. Okay, but most of the time this is the fear gauge. Okay, and this gap gets filled, that SPX is going up. Okay, so if this support line breaks without me even looking at the S&P 500 or not even caring of what the S&P 500 is doing, this is my first line of sight in order to see what XPX is going to do tomorrow. Right here. If this little area here holds and sells off to fill this gap, XPX is going up. If this bounces to set, remember, we had a huge spike on the other, was it Friday? Yeah, it was Friday. We had a huge spike to 17. And what happened? It came right back down. So we know that the fear is below 17 and the greed is above 1550. So that's what we have to do. You just keep an eye on the VIX.
Will do.
Vlad, I see you there. I know you got a question. Vlad/Olga. I don't know which of the two is on. Sonia, anything else?
No, we're good.
Nobody else wants to have nothing to say? Look at Tesla. Oh my God. Tesla's going. What is he? 15 minutes? Yeah. Tesla wants to go. Look at this. Tesla's in a perfect look. When you look at your stocks or your index, whatever you're doing, get in custom of drawing trend lines. Before looking at anything, draw your trend lines. Draw your trend lines. Tesla's in an upward trend channel. So any strength on the Chaikin on Tesla and the Chaikin starts taking off, MACD starts increasing, Tesla's gonna take off. Probably test 790, 800. Wow.
How'd you pick out that 790, 800 there real quick?
Look at the trend line. Watch.
Yeah, I saw the trend line. The text was kind of small. Like I couldn't see the levels there. Okay, cool. I see it. Thanks.
I'm gonna blow it up for you. There you go.
Nice. Got it. Thanks.
That Chaikin takes off and that Chaikin breaks over, Tesla will jump with it. And look at pay attention to the Bollinger Bands. Look, you see how the Bollinger Bands are in an upward trend. The Bollinger Bands are swinging upward. Look, this one's lower, this one's higher. So if this one makes a higher, this one makes a higher, it's gonna attract price towards that 790, 80 something, 90, 99. These pivot points are gonna be automatic magnets. These pivot points are gonna be automatic magnets for them. Remember, you have resistance back here. Look at the resistance back here. So 799, 800. Where is that? Yeah, 790. Matter of fact, 790 is right with the resistance. That's about 790 right there. So you have to be careful with that. Remember, every time it's reached up there, it's sold off. Look. So do we break this time or not? We have almost, look at the checking, almost within the same target area. Look. A little bit less because we're in the summer doldrums right now, so less volume. But look. So if this, look when it went to 790, if the checking fails to go higher, it's going to fail. So we're going to be in the same couple scenario in the next couple of week or two. If the check-in fails to go higher, it's going to fail. All right. Well, if we don't have anything else, we'll see you in the morning. Live and shine.
Thanks a lot for tonight, man. Appreciate it.
You're quite welcome. I'm gonna stream it now on YouTube, so you'll have it on YouTube live. All right, folks. You have a good night. Go to sleep early. Opening bell at 9:30. We're 30 minutes before. Get your coffee. Get your whatever your breakfast, and we'll be here in the morning, live and live.
Thank you.
You're welcome.